All right, guys, what's up? What's up? Let's get into it. Let's dive into this thing here. All right. Sick. So, welcome everyone to another another episode. I don't know. Welcome to another session, another week. We're here live. Hope you guys are doing fantastic. Last time I saw all of you here on the channel was on Friday. We were live for about 2 hours or so. And I mean, how'd it go? For those of you that took notes on Friday, set your alerts, marked up those charts, how did it go? What did you execute? Did you take any trades? All right, here we go. There we go. Sorry, I think it looks like it got pretty choppy here. Closing out of a couple things. There we go. Okay. All right, so should be good now. Better stream quality. There we have it. So anyways, for those of you that are here with me today, let's see who do we got? Who do we got? Mylan, I got Holden here. Hill, what's up? Seth, Josue, what's up? Lonzo, Corey, Gio. So I see y'all starting to plug in here. Every Monday, we're here. Every Monday. Tashi flows. Cool. So yeah, so anyways, let's recap a little bit what happened from last Friday. And let's dive into just what the market has in store for us in general. So I'm going to start with the recap just because I do think it's important for us to see the things that went well, the things that maybe, we had to adjust to, manage differently, etc. So yeah, let me know if you were on the stream on Friday. What's going on? Come back to Miami. April, that's the plan. All right, so let's start with gold. I know I went over gold here with you all on Friday. Gold had some nice volatility, so I kind of want to go over what I had planned out for you all. So on Thursday Asian session, we saw a nice spike above liquidity. The market then worked its way lower. So we were waiting to see what type of movement we could get here with gold. And during London sessions, the first London session of the week, we had a clean mitigation off of the zone. See, I had my entry where we had previous levels of liquidity, last points of supply over here. And so we got a nice little play right there. So from there, this gave us at least, if you took it down to these levels, 3.67 R. If you took it to the previous low, even further. But if I do remember correctly, this is what I had marked up. So if anybody had a limit set for that, within just, looks like about 2 hours, the market triggered and hit for well over a 3 risk reward, potentially a 4 risk reward. So if you did happen to take advantage of that setup, let me know. So I see, yeah, I know Seth is on all of them. Seth is just a savage. Just the hills are always on, doing the work. And I mean, y'all working. Y'all, I know you guys got successful businesses, so there's really no excuse for anybody. Tashi was on, sick. All right, guys, y'all know how it goes. For these streams, I like to do giveaways. Specifically, what I give away is intentional, because it's so foundational and so many people, like, I could give away, money in general, but it doesn't have the same effect. Whereas the trading dashboard, the journal that we give you guys, it's supposed to make you better. Honestly, the ROI is so much higher than just you getting a little bit of crypto or whatever to fund yourself. I'd rather you have a foundation or a book. Can you guys hear the sirens? They're going wild back there. A foundation or anything like that. So for you guys to go, the trading journal is fire. Thank you, Lonzo. So anyways, let's crack the first metric for today's session, since I know this session's a little bit slower usually, let's hit 75. 75, I'll give away a journal. Let's hit 100, I'll give away a trading book. And then the people chosen will be people who tag me on their story that they're live on this. So those are going to be people that get on the random picker. For whatever reason, Linda's on a roll. She just keeps winning. I don't know what's going on, but she's attracting just good stuff. Yeah. So anyways, we'll dive into it, guys. Also, I do want to say for the next for only the next 7 days, I am opening up some slots. If you want to work, hop on all the live sessions, get access to literally every single course I've ever made relating to technical, psychology, systems, everything you can imagine. So if you guys want to plug in there and get access to that for for prices that should be illegal, then let me know. All right. Let me know. I'm gonna drop a form. Just fill it out. Don't fill it out if you're not like already very serious about trading. I don't want to waste your time, and if you waste my time, I'm gonna be really pissed, to be honest. So don't waste my time either. So here you go. Fill this out if you're serious about your trading. All right, cool. I'm gonna pin this to the top. There it is. Okay. So let's dive into this and see what's up. Now from here, we did get a nice rejection and the market dove all the way down. Nice movement. We pushed up again and the market crashed down. So with gold, I'm more bullish than I am bearish. And that's because every time the market tries to make a low or shift structure or anything like that, it just fails. It fails to ever really maintain lower lows. There's just no demand every time it dips down, and you guys see it once, twice, 3 times, like every single time. It's just an absolute fail. So definitely more bullish than bearish. From here, we did see a sweep of liquidity with gold that clears out these highs from 29.5455. So we sweep above that, the market comes crashing down. Yes, it goes below the previous low, but it only happens for a short period of time. There is no real demand on these lows. So one of the things that and again, I'm probably not the only one that looks at the market this way. I'm sure there's other people, but transparently, I don't watch anybody else in the world trade. I just know what I do. So I can't speak for other people, but I do think structure is taught incorrectly on just like everywhere, basically, because it's only taught based off of like price breaking a certain level. It's not like people just forget about the most important and the first thing you ever hear about, which is like, so what's trading? Well, supply and demand, right? How is price established? Well, supply and demand. And we can look at this from the most basic level, right? At the most basic level, we understand that price is established based on how much people want it and how much there is available, right? So, I mean, we've seen it happen so many different times. I mean, this one was just the weirdest supply and demand thing I've ever seen. But like, do you guys remember the whole toilet paper situation during the beginning of the COVID days, where like there was just a mass toilet paper shortage and prices were going crazy? So again, here to just go back into this example on supply and demand, price gets below 29.35. It gets below here briefly, but as you guys can see, these just become wicks. What does that mean? That means that price isn't here. That there's just not enough sell positions at these prices to maintain below 29.35. So why should the structure of the market be bearish if no one even wants, like, if no one wants to keep selling here? Everyone's like, no, this is worth more. or we perceive this as having more potential. Because it's not whether or not things are overpriced or underpriced. Everything is always perfectly priced. There is no overbought or oversold. In my opinion, it doesn't exist. All there is price right now. And we can see demand clearly when it's not just a quick moment. So right now, when we're breaking below these levels, if anything, this is showing us that price, whenever it reaches 29.35, 29.36 or under, there's just consistently very little demand at these prices that the market wants to trade higher. So you can comfortably take positions at these levels. You're in a 4-hour OB. What's what you're saying? See, this is something that's really interesting. William Thompson. I'm not sure who you are. So here's something interesting, and please don't take this with disrespect, but you're speaking in certainties. Price never filled it. You're in a 4-hour order block. Once it rejects, then it will fall. All of these, you're speaking in certainty. It will fall. It has to. Nothing has to. Nothing will. That's the game. The game is absolute uncertainty. That's what we're trading. I have 10 years of experience, and that's a very dangerous thing. And even if maybe you're not really believing that these are certainties, but we do have to be careful on how we process information as traders, because that is how we get caught up in certain biases, right? That's how we get caught up in things have to go up, things have to go down. And at the end of the day, we can rifle through different perspectives, different time frames, but time frames are just a perspective. Time frames are just perspective. That's all that it is. There is no candlesticks in itself are just a form of language. It's how we interpret information. Why is this thing so slow? All it is how we interpret information. So there is no such thing as a, so for example, you said we're in a 4-hour order block, right? You switch up any sort of time frame and you'll get a completely different perspective. So at the end of the day, and again, I'm just saying this so that you guys you just have to process your own emotions and your own thoughts clearly. That way we're not living in assumption-based trading. It's dangerous. The month is closing, so be careful. So again, I trade with absolutely no fear, because at the end of the day, you have your established risk. You have your established parameters. So even buying, even selling, it's like, and I'll give you guys perspective with this, because this is one of the most common mistakes that people make, especially newer traders, is that I don't want to buy the highs, right? Of course, you learn this super early on. All right, buy low, sell high, right? Okay. Now, if you zoom out and you're looking at price action from, let's just say, starting from here, from the beginning of the year. If you're fearing buying, then you miss this entire move. Because depending on where you're at, we're at all-time highs. Let's be careful. For example, January 31st, all right, market cracks all-time highs. Right over here. So a whole month's worth, and you don't have to trade any of this, and that's the beauty about trading, right? You do not have to trade if you feel like it's too high or whatever. But literally the whole month kept pushing higher. So it's not so much buy low, sell high. It's, if you're going to buy, sell higher. If you're going to sell lower. And it's all relative. So and the only reason I'm saying it the way I'm saying it is because people like to give advice without context. And so when you're looking at things like this, for example, are we trading at extremely high prices? Of course. We're near all-time highs right now on Bitcoin. Literally, not Bitcoin, gold. So we're at very high levels. However, does this scenario really change? All right, if you're looking at it like this, let's just say this is the trading environment, right? And we're looking to, let's say, take a buy position where we've seen here, right? The market captures liquidity. It's not quite, has not made a higher high yet. So if you do get a higher high and we see price trade over here, then we're gonna it's gonna be an even better position. Right now, this is a little bit, a little early. But at the end of the day, let's say this is the trade you were looking to take, and you're, I don't know, looking to exit where there's some liquidity. Regardless, you're still able to get 3.5 R. If this is your goal, maybe less. Let's say you're 2R trader. Maybe your exits are, I don't know, previous structure points. Maybe it's just a fixed risk reward. Whatever your exit is this still, does this still accomplish your overall goal? If you take a position here and you lose, you're, at the end of the day, you only lose 1 R. You only lose 1 R. So having the fear, because you're already in a high range, I would understand tweaking your exit strategy, absolutely, because you don't know how in price discovery, can we keep going higher? But fearing the market in itself, if you have your textbook setups, I wouldn't necessarily fear it. And I think a lot, especially if you're trading like indices, right? You see indices just trend and trend and trend and trend and trend. And if you're like, it's kind of near all-time highs, let me just stay out, you miss years worth of movement. So just something for people to keep in mind as they're looking through it. Yeah, probability over reward. Are you going to go over liquidity? There's certain scenarios where we'll go over. If, you know, every setup's going to have, my setups require liquidity sweeps in order for things to play out. Now, looking at it from the other side of the coin, we can see how different gold is from silver, right? Silver has struggled to be bullish, and then whenever we have bearish trending markets, silver is the first to keep pushing lower. So there's really 2 setups that I was looking for here for gold. One, or for silver, we had this February 12th. We had a big sweep below, and the market starts pushing higher. Now, silver never triggered this buy. It didn't yet. Gold did. Gold came in, triggered this, and ran. Okay? So if we're looking at price action, gold right now is way more bullish in general than silver. Way more. Silver right now is just naturally trending lower. So when gold or silver, let's say when gold pumps up, silver goes up too, but just not as aggressively. But whenever gold goes down and or silver goes down, silver has just a much more aggressive move to the downside and actually keeps consistently sustaining bearish structures. So right now, for example, comparing gold and silver both pumped during a pre-New York session and then dropped. Gold didn't make lower lows, actually really just immediately ran up, right? Silver, on the other hand, though, silver, yes, cleared the highs and worked its way lower. However, silver did withstand the lower lows, bearish structure, and it actually traded below these previous lows for the entire New York session going into Asian session. So silver has a much better chance of selling. Like, I didn't sell gold. Despite it sweeping liquidity and pushing down, I didn't sell gold here. Why? Because silver definitely has a lot more of a bearish structure than gold does. So silver to me makes way more sense as a sell than gold. And you can look for entries where you've seen previous levels of liquidity, these previous levels of supply right here. So there's a lot of resistance right here. Liquidity sweeps this. You can argue that for sure there's a bit more liquidity over here as well, so more retail sellers in the game over there. So your entry could be anywhere from here to here. Obviously, if you take an entry way up here, the risk reward is It's quality, right? This is a very, very nice risk reward, but you do risk not getting triggered in. So it's really up to what would you prefer. Do you prefer a higher probability of being triggered in, or are you okay with maybe missing out on the trade, but if it does wake you in, then your risk reward is very, very nice. All right, so here we got this all said and done. My target would be this liquidity right here. This would be my first target. And my entry, I would go for a slightly lower entry. We could dive into a smaller time frames if we want to get a little bit more context on the market. But here we have a pretty decent imbalance. The market melts, chops up a little bit, keeps pushing. So I do think we can get a little bit above this. So yeah, trading right around where we have this resistance here. This is a high probability entry, in my opinion. Right over here. And then the market just targeting where we've seen previous levels of support, liquidity. This is like a magnet for the market because there is retail positions right here. So the market can definitely target these equal lows. So silver looks fantastic. I do like the silver plays here. And every setup that I do see that looks quality to me, I am going to share here in the Telegram like I did last week. Last week I gave you guys some plays there. Many of them played out. Positive RR. So here's the Telegram as well. Sorry, Telegram. All right, so now let's see. Can you have multiple things? Oh, they would replace it. All right, well, there's the Telegram. I'm gonna drop these setups in here. So these are, what is it today? February 24, 2025. YouTube stream setups. And this is silver. Okay, so this, honestly, this could happen at any time during this week. Seems like sooner rather than later. But there you have it. All right. Appreciate you guys here liking the stream, subbing, and all that good stuff. Appreciate y'all. So from here, gold looks good. I have an alert set up, so if we get into the zone, kind of ready to be able to manage this and everything like that, just looking good. From there, that's basically what I got for you guys for metals. I want to give you guys another example that I shared with you all on Friday, and then everyone that trades with me live. I think we have a couple hundred people every morning. We took this peso play right over here. How many of you took this Mexican peso sell? If you were here live on Friday, I shared this with you, and then we did trade this together in the morning, this morning. So this was nice because this actually played out of the imbalance right here very nicely. So triggered our sell position in here, which was mitigating this massive buy position right there. Market comes in. So they're able to close out the buys, open sells. You see a huge move down, and then the market, like clockwork, targeted the liquidity buildup here. So we saw this trending, retail buyers like to play these buys off of these trend lines. So this builds up liquidity, market sweeps, and then from here, price worked its way into this imbalance. And these are great places for exits in the market before this came back up again. So right now, I don't have any re-entries. I'm just gonna wait and see what the market might give us later on. But yeah, no real re-entries quite yet here. But yeah, this was shared. Gave this to you guys actually a few times because this was setting up since the 13th. So last Monday, and then Friday, and this morning. So good to go. 6M played out nice for 2R. Yeah, I took this on futures as well. For futures, you're not selling dollar peso, you're buying, 6M contracts. So it's the flip, it's the inverse of this. The chart is a little bit different. It's not exactly the same, but it does the same things. So basically, whenever I would hit sell on any CFDs with dollar peso, I am buying 6M same moment, and then I just look at this big pump here, which was at 12 o'clock Central Standard Time on Thursday, the 13th of February. I'll just look at the chart, same thing on 6M, and just do, place the stop below. Here I placed my stop above this wick. On 6M, it was below that one. A little bit more complicated. Not everyone here trades futures, but just a little bit of insight for those of you that do trade futures. It's really not that different. Okay, so I'll do crypto real quick before I dive into indices and what I expect out of there, because I know most of you, you're trading indices on CFDs, or you're trading, YM contracts, NQ contracts, ES contracts, or whatever. So with crypto though, specifically, Sol did get to our level from October of 2024, and it did just mitigate this out of below 138. So we're rejecting this area pretty nicely. However, it's not doing so in a way where I think this is ready to roll and just fly yet. Sol is leaving liquidity behind, so let me make this line one level thicker here. It's easier to see. Yeah, Sol is leaving behind right now, a lot of equal lows. So this squeeze probably is going to sweep at least one more time. But yeah, I think we're going to see this push a bit further. From there, ETH right now is still not quite accumulating. And then BTC. Yeah, so I don't know. I feel like we should get another sweep in general with crypto overall. I think ETH also can work its way down a bit further. With Ethereum, we do have a bit of liquidity that we haven't quite gotten below yet, which is right there. So clearing below 1.2450 and into this imbalance makes a lot of sense. And right now, I think there's a lot really lies on what happens here, a lot, because if you look at this from a daily standpoint, has the market distributed, given us higher time frame distribution? We distributed these prices over here, but have we gotten a break below any level here? Have we really seen demand prove itself below 92K? No. So it gets interesting, because when I look at this type of price action, this kind of reminds me of price action from a few years back. And I remember trading this here. And so it kind of reminds me of this right here, which is coincidentally similar times 4 years ago. So, for example, and then I'll show you guys kind of what I mean by this, but at the time, we were seeing, and again, this is now the chart from 2020. This is December, January 2020, 2021. So the market here is, starting to make these big moves. Does this not look very similar to price action from the, literally a couple weeks ago? Market goes down, loses momentum. Okay, market goes down again. Here it looks like it's making a higher high, fails to sustain it, dies. Market goes down again, below 30K, not quite. Okay, pumps up again here, losing momentum. So right now, higher high, higher low, higher high, still not breaking below this, still not breaking below here, tries, fails. And then eventually, the market rallied. So there was really no confirmation that this went bearish. It tried, but the demand just wasn't there. Now price kept rallying, and then, you know, February started to get really bullish. Right now we're going into March here soon. So a part of me, and I'm really looking to take hope out of the equation or anything like that, which, because I don't necessarily need this to go up now. I mean, the longer that it's not going explosive, the more I can accumulate, so it's just fine. But look at how market starts to push forward. So, okay, then as February kept going up, and then we started to get March price action, take a look at how this starts to form. And you can tell this is going to be a little bit different this time. Okay, so we're starting to get into April, and things do start to distribute here a little bit soon. So this is a totally different example. We're almost there, guys. Okay, here we go. This is how things become very different. Watch. Here we see aggressive moves to the upside, clearing a whole bunch of price action. Here's the 4 hour. So you have higher lows, higher highs. The market melts. It absolutely tanks, makes lower lows, comes back up, drops again, comes back up, drops again. So we're starting to see that there is demand below the previous low here. And then it continues to give more demand below there. So we're already seeing the confirmation that the market is in fact bearish here. Not only that, then it starts to rebalance. So this is one structure. This is one range. Market rebalances. These are great times to maybe take some partials, get out of the market, whatever. All right. And there it goes. Dips down a bit further. Where does price come back to? Market rebalances. This aggressive movement from January. So mitigates here. 4 months later. What does the market then do? Chills out. Summertime consolidation. Starting to build up liquidity. Right over here. So what could possibly happen, right? More sideways movement. June, July. Here we go. We clear out liquidity again. Again, this is just walking you through what you already know, but you're getting to see it kind of, it feels like real time. I got to live this. And this was the second cycle. And then all of a sudden we start to accumulate. Here we had a massive sell-off. The market gives us higher highs here on the 1 hour, and there's demand up here as well. Market comes back. You can buy off the demand right there, last point of supply. All right, pulls up again. Here you see another sell-off. So I'm just showing you guys the difference between what distribution looks like, reaccumulation. All right, so look at this. Swept the lows, moving sideways. We mitigate so the market gets into this zone. We clear these lows. Market pops off. Okay, perfect. Once you start seeing sideways movement like this, again, more liquidity. This is showing you like, hey, there's retail buyers here. What are the chances that this is going to hold? All right, aggressive move down. I don't even remember the last time I looked through price like this, but You guys can see this unfold. Will we get higher highs here? Looks like it. All right, shifting structure again. Can we go bullish here? Looks like it. So, all right, zooming back out again. Here, big picture. We just saw the market give us epic examples of accumulation over here in the big picture of things. And now this thing starts to rip again. We're getting into August. Remember, this is 2021. Things start to get, and this is just Bitcoin. Altcoins are doing hilarious things at these times, like absolutely mental movements here. And you know, we just continue this rally, and this thing starts to go parabolic, leading into October and November. So again, price really never leaves without you. Here, market came back, you know, played out of this, mitigated this area over here. Just time and time again. Market starts to get aggressive. We're going into November. All right, so from here, the example is this, that the market breaks these lows and actually creates demand down here with the 4 hour. This is where the market then decided, okay, we are going to dump below and get to these price actions over here, right? But in January of 2021, it failed to do that. It would break below, but there just wasn't enough demand. See that? This right here is kind of what I feel like is happening right now. The market then rallies. We get prices up into, all right, so let's zoom in again. We're going absolutely insane here. There's a couple other factors that you can keep in mind, but like looking at the USDT, there's super low amounts of stable coins at this point. Market dominance, Bitcoin dominance is really low. Altcoins are just, so much money is in altcoins at this time. And then this is where things get very interesting, because this is where we see the market do the following. So check this out. Man, y'all, this would literally save people so much fucking money, but everyone's goldfish attention, man. So what happens here? What just happened? All right, here we go. So here you have the liquidity capture in all-time highs again, and then market establishes this lower low and confirms demand. Like price trades down here. So suddenly you just see all-time highs, lose momentum, demand is bearish. That was the signal. Sweeps liquidity, mitigates this massive move right here, market dies. Basically, this is what you want to wait and look for in the future. This is what you want to see. Good sell indication, and then if you have the 4 hour confirm the lower low, it's game over. Here, higher high, higher low, higher high, not enough demand over here, dips down, plays off of previous levels here, dips down again. This was screaming. And then here's the thing too, is this leaves liquidity. And this is where then everyone just was waiting, right? Waiting, like it's got to come back, right? It's got to come back. But the problem was there was so much inefficiencies that obviously the market has to work its way back and down. It had COVID things to go take care of. The market needed to become efficient, blah, 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 blah.